The price of gold is moving up. Should you be worried? I'm Steve Forbes, and this is What's Ahead, where we give you the insights you need to navigate an ever more turbulent world. When gold moves up, smart investors pay attention. The yellow metal today is up about 60% where it was 2 years ago. It has jumped smartly in recent days. The surge is a warning. The Federal Reserve, America's central bank, is starting to create too much money, and if this continues, we'll face a serious financial and economic crisis, perhaps as soon as next year. But the timing is the tricky part. For example, in the early 2000s, gold jumped from $300 an ounce to over $1,000 several years later. But during this years-long move upward, stocks and the economy seem to be doing well, even though there was a red-hot, unsustainable housing market. Then suddenly the stock market cracked, the housing bubble burst, and we're in the Great Recession, with unemployment surging upwards. Every major economic disaster since World War II has been preceded by big changes in the price of gold, usually upward, except for the 2000-2001 recession, when the yellow metal had fallen by a good 1/3 in the 4 years preceding that crisis. New trouble can be avoided if the Fed's monetary policy stabilizes, and you'll know that if the gold price stabilizes. Some investors wonder why gold hasn't gone up far more than it has, given the Federal Reserve's nonstop creation of trillions of new dollars since February. That's because the COVID crisis created a gargantuan demand for money, one would normally see only during a major war. Emergency action was needed, but now it appears the Federal Reserve is overdoing it. Of course, whether we get into serious trouble will depend heavily on economic policy in Washington. If after the elections we get a tsunami of new taxes and regulations, the economy will falter and our central bank will respond with an eruption of new money printing. But monetary policy can't overcome a rip of higher taxes and crushing burdens on businesses. In this situation, the dollar will teeter and will undergo a Category 5 economic hurricane. On the other hand, a new round of tax cuts and deregulation will create benign conditions for a vibrant economy that should induce the Fed to cool off its red-hot money printing presses. Bottom line, watch that gold price. I'm Steve Forbes. Thank you for listening. Do send in your suggestions and comments. I look forward to being with you soon again.